Hello, ladies and gentlemen. Welcome back to another episode. This is your host, David Kim. Hi, Bukola. Thank you so much for joining us today.
Thank you for having me, David.
Great honor to have a very famous lawyer on my podcast.
I'll take that. Absolutely.
Yeah, somebody said that you are the most competent lawyer for the venture capital in Africa.
I would say a big thank you. So they must have gotten good representation from my end. So yeah.
Okay. Anyway, yeah. So I have a lot of experience working in the lawyers when I work at the international bank and finance company. So
Okay.
I understand lawyer very much. So we can have a good chemistry today.
Fantastic.
Yes. Would you like to introduce a little bit about your background and then how you joined the TNP?
Oh yeah, absolutely, David. A big thank you again for having me on. Yes, so I joined TNP over 10 years ago now, and that was really just within a year, after qualifying to practice law in Nigeria, right? And I've transitioned from a greenhorn lawyer at that time to a partner, right, in the fastest growing law firm in Nigeria today. And currently, I head the corporate finance practices of the firm, and which also covers private equity, venture capital, M&A, and all the works.
You cover everything related to finance.
Yes. Okay. Yes, correct. Yeah. So it's an exciting ride. It's a terribly busy one as well. But I think most important is it's been a very rewarding experience. Yeah, and of course, I know you know a bit about TNP, but I guess I'll dig deeper into that if you want to hear more about TNP.
Right. Yeah. For those who don't know the TNP, why don't you introduce a little bit about the TNP, how great TNP is?
Absolutely, my pleasure. TNP, we refer to ourselves as, Nigeria's truly global law firm. Global for us is because our outlook, right, is global, but with a local commercial awareness, to give our clients the greatest value for anything we handle for them. We're also an Anderson collaborating firm, right, which is the Anderson Global Group, and we have a presence through our peers, across the globe. And the resource base is phenomenal, right, with a network of over 6,000 legal and tax advisory professionals in various locations, 42 locations in Africa alone. So, we're well experienced in the space. TNP itself is a growing and evolving practice. And we're a boutique practice of just over 20 lawyers who are keen and super eager to provide excellent and innovative solutions to clients across different practice areas, right? So as much as I focus on corporate finance, private equity, venture capital, the reality is our practice, right, spans a lot of practice areas and spans a lot of industries. Okay, so we find ourselves operating across various sectors of the economy, including government, fintechs, edtechs, energy, FMCGs, financial institutions, logistics, and just name it. So it's really exciting, right?
Yes.
Supporting people to grow their businesses, and we're really proud of what we do in that light. And specifically, a large part of what we do is supporting startups, right? So supporting small businesses, because we do take a lot of pride in helping these companies grow and scale up their businesses, And we've been doing that, and we've done that with, a number of companies that have come on to be great success stories, as we're all in Africa continuing with this journey of building our own African unicorn. So yeah, that's TNP in a nutshell.
Okay, got it. For the past couple of decades, when I work as a banker, with my lawyer, because lawyer have independent, position to identify risk and say no about the legal risk of transaction, right? So especially international company like General Electric, lawyer can kill the deal. in front of a CEO.
Sure.
So I always had this conversation. I mean, we can identify problem, but do we have to solve the problem? Like we should not kill the deal, right? I said always say,
Absolutely.
we have to look at the bright side of the word. And then, so do you think that
Honestly,
you
yeah.
are the problem solver and then enabler instead of the risk manager, right?
Absolutely. We see ourselves as solution providers. I tell, my colleagues all of the time, if you cannot, provide the solution to your client's problems, then you're not serving them, right?
Right.
So we must be able to help them find solutions and yeah, and just, evolve and help them to achieve what they want. I mean, personally, as a person, what drives me is results, right? And so results effectively solutions. If you can't get results, if you can't get a way out, then what exactly are we doing? So I agree with you, David.
Yes.
It's absolutely important.
I mean, I'm familiar with the lawyer in the Italian movie. Most of the family have the family lawyer who solved whatever problem, right? Whatever problem. Yeah, it's kind of family concierge, right? That's the role actually the lawyer I want to have.
Yeah, absolutely. And you're not asking for too much at all.
Right.
It has to be a partnership, with your
Yes.
lawyers. You
Right.
must work hand in hand,
Yes. Yes.
There must be the trust. There must.
Teamwork. Yeah, it is a teamwork.
Yeah, absolutely.
Yeah,
Absolutely.
I agree. So today we are going to talk about basically about the investment term sheet in the venture capital term sheet. I'm
Okay.
familiar. I'm familiar with the situation because of my background. I mean, even though I'm not a lawyer, dealt with a transaction agreement, investment agreement, financing agreement all the time. So people or my friend or some acquaintance reach out to me, ask about the investment term sheet all the time, right? They feel
Yeah.
scared. They feel afraid of contingency. They said, what if we breach the covenant in the agreement? What if I lose control of the board, or what if the investor, because they built in a lot of sophisticated legal structure in the agreement, what if they remove me from the CEO position, right? Based on the contingency or breach of agreement, something like that. Are you familiar with that situation?
Absolutely, David. I think I should start from the fact that, even coming from where my primary base is, right? Traditionally, the typical entrepreneur and investor relationship was never really trusted, right? So it's been a really great story, learning to, change the mindset of the entrepreneurs and guiding them and just trying to let them know that these things, they're not rocket science. Nobody's trying to shaft you. All we are asking is, just you need to work hand in hand with your investor. You need to make sure you have an experienced lawyer by your side, and you need to do the most important thing: listen to your lawyer. So yes,
I agree totally, because some entrepreneurs sometimes someone who reach out to me about the legal advice about the contract, they discuss or try to get advice from their friend from the MBA or law school, even though that they are lawyer, their friend are lawyer, they may be tax lawyer, they may be patent lawyer, they may be a different type of lawyer. So they try to understand the agreement, terms of agreement, just based on the language. They don't understand nuances around the terms, right? Then the thing is that a lot of people say that you should, you should, trust the investor. You should build relationships, trust over a long time. But problem is that if you don't understand anything about the contractual arrangement, agreement, anything, that there is a possibility investor try to play the gamesmanship, right? So you should have some basic understanding, getting the professional support from the lawyer. I agree. Yeah. I did a quick research study because I'm not actually, my background is not a venture capital, like investment in the large corp and the corporate financing for the large corp. So I look at it. I look at the couple of the venture capital term sheet, and then I identify the couple of the item that
Mhm.
may be contentious or controversial item between the entrepreneur and the investor. For example,
Yeah.
what I have identified the pro-rata clause, right? And
Mhm.
the vesting and revesting imposed on the founders and the key member. And redemption
Mhm.
right, the exit price. I found this clause one agreement and the cap for conversion and redemption right with the exit price. Is it common in the venture capital agreement?
Yes, I mean, it depends on, the structure of, what the agreement is being, right? So you'd find, say, the redemption, options where the agreement is being structured as,
Let me ask.
say,
Let me ask you this: Is it used for common equity investment as well, or the only
okay,
cover
so
only for the mezzanine, like a convertible bond or preferred?
exactly. Now you got it right, absolutely. So no, those are not for common equity investments.
Okay, okay, I
Yeah.
see. So I mentioned four item I consider I consider maybe contentious between the entrepreneur and founder. What about your experience related to these
Okay.
four items?
Yes. So you're right. Those items you mentioned are often contentious. I mean, from the things I've seen as well, a number of other concerns, would relate to uh, the sort of control, the investor wants. So governance, management, and control, right? So
Yes.
from from the board appointments to the voting rights and information rights. The information rights one, I guess, the typical entrepreneur is wondering, if you want all of this information, when am I supposed to get to work? Right. So
Yes.
that's something that gets quite
Right.
interesting. Yeah.
It
On
makes
the
sense. It
governance
makes
bit,
sense. Right.
yeah, absolutely. I think entrepreneurs always want to just focus on the business, right? But you see, the
Right.
reality is, you're not just going to take someone's money and just run business as usual, right?
Yeah.
There has to be some sort of control, or, for want of a better word, monitoring, that is going on. And
Yeah.
so they tend to go back on these things. I think one of the other issues, we also see, are those around, what do you call it, the pro-rata preemptive
Yeah.
rights, which you mentioned, right?
Yeah.
The veto
That
rights,
could
if
be,
any.
yeah, that could be because I can imagine scenario, right? Contingency. For example, I'm the
Mhm.
early stage investor because at early stage I get a very low valuation investment, right? Opportunity. So
Mhm.
I got a 20% of the shareholding in the beginning. And then the
Mhm.
company growed very successfully. So they are having a
Mhm.
discussion with a global investor, very reputable investor. For example, Alibaba or the Bill Gates or the Facebook or the
Mhm.
Masayoshi Son from the SoftBank. So it is a great opportunity for entrepreneur, right? If they receive the investment from those investors that help with the business too, right? Because
Absolutely.
it is a great way take the business to the next level, to totally
Mhm.
another level. But assuming that early stage investors said, okay, I have a pro rata rights, I have a right to maintain my shareholding percentage, right? So even though I mean Masayoshi Son from the SoftBank, he want to have a 20% of the, I mean, chunk of the your shareholding, but I need to
Mm.
maintain the, I need to use a exercise the pro rata rate. I want to have
Mm.
50% of that investment. Then is a, it may generate competition and conflict with the new investor, that reputable investor, right?
A whole lot, David. And I tell you, a lot of deals have failed, because of these issues. I say to, my clients, or when I mentor startups, or, when I speak all the time, it may sound unlikely, right? However, the most important documentation you need to pay attention to are the early stage investment documentation. However, it's so unfortunate, right, that we think we're just taking money from family and friends, we're taking, not a lot of money, and, entrepreneurs don't pay attention to it. But I will repeat it. you need to be very careful about what rights you're giving away at the very early stages, right? Because it then complicates your life going forward. Any other investor that comes on board either wants the same right or they don't agree and they want you to renegotiate, with the existing guys. And then it becomes a lot of trouble because the existing guys do not want to listen. And a lot of things happen at those stages. You get onto deals and you find out, as you mentioned, that Alibaba or someone else wants to come in. And then we find out that, the previous investor had a valuation cap, they have a discount, and Alibaba is wondering, so why am I coming in, right? If all of this wipes up, why all of my value, So I think my one word for entrepreneurs at this level is, it may not seem like you need your lawyers, or you need your experienced lawyers to guide you through this early investment stage process. Be extremely careful and guarded about what right you're giving away. Don't think because it's just a little money or they're just coming in now, we'll rectify things later. We will rectify things later never always works in your favor, right? I've seen deals that broke down because the early investors refused to shift their positions, right?
Yes.
And the reality is you have documentation with them. So what are you going to do? You lose your future investors ultimately.
Right. Yes, you are absolutely right. I think even startup, they need to work with experienced lawyer, but in reality, they try to save the money, right? There's one of
I know.
So they try to get very casual advice from friend who are not the legal expert or the not appropriate lawyer, right? Different lawyer, right?
Or they say to their friend, well, you've been through this before, right? So can you just look at mine for me?
So
I know.
That's challenging. That's challenging on the startup side.
So you're right, and you're absolutely right on that. And even to colleagues, right? I say to colleagues that we operate in a space where there's not a lot of monetary compensation at the table at these early stages, right? But you're playing there because you really do believe in impact, right? And you really do believe in the growth trajectory of the company. So we need to provide a lot of support at this level. So which is why at TNP we're also very flexible. We want to listen to you. We understand these companies have concerns, so we try to build bespoke products for them, and we just try to let you understand that we prioritize you getting things right. We'll work out the maths later when it comes to finances, right? But it's important that you're not running from lawyers simply because you can't afford to pay, and then you get to bungle things up, and then you end up paying so much more. So I say to entrepreneurs, never be afraid to have conversations with lawyers, right? Do your research, find out from your peers in the industry who they've worked with, you get solid referrals, and you'll find out that we are not as scary as we may sound or as we may look. So please, don't shy away from it. The worst is the lawyer will tell you this is this is what it's going to cost, and if you're not able to reach an agreement, you will find another lawyer. But do not try to bungle things up.
Yeah, because entrepreneurs, usually young people, where they don't have a lot of experience running a business many times in the past, right? That's not the case. Then this is the first time or second time, or in terms of fundraising, this is the first time or second time, right? So they review the similar agreement just twice, right? They understand, they barely understand the literal meaning of the clause, right? But I totally agree. They try to save money because cash flow is very important, but still need to discuss with the experienced lawyer, right? Otherwise, it costs more money.
Later. It does cost more money.
It costs more money.
David.
Yeah, but they don't have that culture. They don't have experiences. But that's not a good way to save money. They need to work with the experienced financial advisor. They need to work with the experienced lawyer. Then they can save money. Right?
Yeah, absolutely. You save a lot of value down the line, even if it doesn't look like that today.
Yes. And then another clause I discover in the venture capital agreement, I saw that the liquidation preference. But to
Mm.
me, if I stand on the side of entrepreneur, I don't think it's a fair. I don't think it's a fair. I understand the logic, but is it popular and common in the startup investment agreement in Africa?
Absolutely, absolutely, it is. The liquidation preference, right? I mean, as you must imagine, once you've done what you call it now, once you've done a preference structure. So first of all, is this would only apply, right, to a preference share structure. So it would not come to play for common
Mm.
equity.
I see.
Okay,
Mm.
so that yes, it won't come to play for common equity, but once you've given pref shares, then of course, it would come to play. And the liquidation preference is something that, it's a typical feature, right, for prefs. And the liquidation preference is bottom line, how will, proceeds be distributed, in the event of a liquidation, which is not really just your winding up and sort. It's like, where there's an M&A, a change of control, right? So remember that prefs are done, right? Because and when I say prefs, I mean preferred shares, right? They're
Yes.
done because your investor is trying to lock in value of their
Yes.
investment,
Yeah.
right? Exactly. So that's what
That's
it
the
is.
part that I don't feel fair because the company is liquidating. They failed. How come they try to recover all the investment return through the liquidation? That's too much, right? I mean,
Uh,
you made an investment with the responsibility, your own responsibility, right? You are not the, I mean, you are not the senior secured lender of, I mean, at the bank, right? That's my argument.
Absolutely. So you may not be senior secured, but you see the liquidation grants you a sort of seniority over
Yeah,
the ordinary shareholder, which is the common
founders.
stockholders.
Yeah.
Yes, exactly. So because once you've paid off all of your debt and everything else that are required by the law to be paid out in a liquidation, right? Then what happens next is how will this money be distributed? And in distributing it, the guys who have secured their monies by holding on to pref shares, they want their money first. So there are different scenarios, in fact, for how liquidation preference is drafted, right? So I'll be honest with you, I don't see an issue, right, with investors trying to lock in value, right? Because they know they're playing at risky stages, and if anything, at a minimum, they want to protect their original investment. So, which is where your advisor then comes to play, right? Okay, so there's a liquidation preference, but you must pay attention to the fact that is this liquidation preference a non-participating, or a capped participating, or it is uncapped, and what do I mean by that? There's the first part, which is where it's a simple liquidation preference, which is non-participating. It means you get your money back, and then the rest of it, right, will be distributed to the holders of ordinary shares pro-rata. So that's the non-participating. So you get your fair share, right, which is you get your money returned. The other part is the capped participating, and what would typically happen in such scenarios is the investor gets its money back, and after getting its money back, the balance of the rest of it will then be distributed to the ordinary shareholders and the preference shareholders, as if those shares of the preference people were converted to ordinary shares. Now, a lot of things could be done here. It could be distributed to everybody pro rata, right? Completely. So that means the investor has gotten its money back, and then the rest of it, everybody shares, ratably. The other
Yes.
aspect
Yeah.
is your lawyer can negotiate to cap their participation. So we can say that, okay, we will distribute to
Yeah.
everybody
There might be
proratably.
one way. Yeah, there might be one way. Yeah.
Exactly,
Mm.
exactly. And that for the investor, your participation in the extra, right, it stops the moment you've gotten 2 times your money back, or the moment you've
Yes.
gotten 1.5 times your money back, or 3 times. So it's just, it's so interesting. These changes can be made by one liner in the agreement, which you never see, So which
Yeah.
is why, again, you need proper guidance to go through this documentation.
I see. And when I was investor and lender, I we always told our client and the borrower, investees, said, okay, this is our standard agreement. We have done this all the time. We never change it. We never change it, and then we never
Yes,
change it.
yes,
Right? This is a
yes.
printed version. I cannot change it. It is not word.
That is
That
always the trick.
if you work for the entrepreneur and then help to negotiate with the investor, how would you advise? I mean, how do you advise?
Fantastic. It's very, very simple, right? Um, you want to buy something from me because you bought something from someone else the day before. It's a simple. You say you want to buy a car, and you're saying
Yeah.
this is how much I buy a car. The price of a Mercedes is not the same price of a Toyota,
Right.
right? And the components of each car, right? They're different. So I think the simple conversation is this is exactly why you have spent time to understand my business, right? If it's bottom line the same thing, then there was no need for you to try and understand my business because you could have as well said, oh, well, I've been investing before. Here's the check, here's the terms, and I'll sign, right? But you've taken time to understand my business. So it has to be a tailor-made solution for each one. I hear
Yeah.
you, right, on the fact that you said these are your standard terms. Unfortunately, X and X will not work for me because of why.
Mhm.
It's always important to articulate your position as well. And I tell you, one thing I've also discovered is um, when you're working with, the more junior people, with the investors, right? You tend to get this feedback a lot, which is this is standard, this is standard. And as an entrepreneur, I tell you, this is where you call it you call a hold and ask them, okay, can I speak with your principal? Can I speak or can I have this conversation, with your manager? Right?
Yes.
Because those people are able to make better decisions or more decisions or be able to waive certain things, right? But for what it's worth, I can tell you for free, I work for both investors and investing companies. There is nothing like this is our standard arrangement, right? It's the trick that always works. Unfortunately, because a lot of entrepreneurs are not investment savvy. However, it's never not unchangeable, right? You can
Right.
negotiate your terms
That's true.
within reason.
It depends
Within
on
reason.
option. If I have a lot of option of
Exactly.
investor, they will, I mean,
Eh, mm,
yeah,
mm,
they
mm.
will accept to your the
Yeah.
request, right?
Entrepreneurs fall for the trick, right? When they're desperate. And that's the hard
Yes.
truth, right?
Yes.
So I think that's also, one solid advice is never try to raise cash from a desperate point of view.
Right.
It would never work in your favor because then you get tempted to accept all manners of terms, right?
Right.
So it's always good, which is why planning is a very necessary tool for entrepreneurs. You must be able to plan. You can't wait until you're cash strapped.
Okay, let's move to the next question. This might be very popular topic. Like I'm not in Africa, but assuming that I want to make investment, very promising startup in Africa. First
Mhm.
question from my team or the lawyer will say that I mean we should come up with I mean acceptable jurisdiction and the domicile, right?
Mm,
I don't
mm,
want to research and then accept the jurisdiction or domicile in specific African country because I don't have knowledge to do that, right? Then they say
mm.
that they propose something. So what about the popular jurisdiction for the investment in African startup? Do you accept the Nigerian jurisdiction and domicile, or do they have any popular destination for that?
Okay, so it's a few things, and you also a lot of it depends on the domicile of the investor itself, right? And of
Yeah,
course, their investment thesis and things,
I'm
right?
from Hong Kong. Let's say
There
I'm from
is
Hong Kong. Yeah, Hong Kong.
right. So, honestly, there's a lot of investment directly into African jurisdictions, and there's never
Okay.
an issue with it. However, other popular jurisdictions, and I think the most popular these days really is Delaware, right? And
Oh,
so
that's
what you
interesting.
have is
Not not
yes,
not
yes.
not not about the American investor. Non-American investor, they still prefer that jurisdiction and the domicile.
So again, which is why I said depends on the investors. So we're seeing a lot of traction from American investors these days,
Okay.
right? So
Okay.
where there's a lot more American investors, and if they're cutting the bigger checks, right, then things probably just end up in Delaware, right? And the company is probably even already working to set up in Delaware because, hey, David, as you know, everybody is thinking YC or some other Silicon Valley, you know, they're coming from one of the Silicon Valley accelerator, or they're targeting investors from Silicon Valley. So Delaware I've seen has been a default, right? But from time before all of this Delaware rush, a lot of focus was in Africa, and a number of these were being done with Mauritius and the
Yes, I
likes.
heard about Mauritius a lot, in fact. Yeah.
Yes, correct. And also with European investors, I think the ones I see the most are the BVI and the Netherlands as well.
Okay.
So yes, those are also popular
Yeah.
jurisdictions from Europe. So
Okay.
again, I think the core is about where is your investor base? Where do they typically invest? But for what it's worth, I really don't see investors run away from, let's say, Nigeria, for instance. But we find that at the end of the day, they find it necessary, right, to restructure and reorganize, and then a flip is done into a Delaware or a Mauritius or
Yes.
somewhere else where they realize that for their tax purposes, they're better off with investment seeking in those jurisdictions.
Yes. So, I mean, investor I'm familiar with. I mean, I worked with in the past from Asia. Uh, if they don't have a lot of experience in Africa, I don't think they will accept the African jurisdiction or the domicile. Probably they ask them, investee, startup, yeah, you may set up the new holding company in Mauritius, Hong Kong, Singapore, any jurisdiction that is acceptable to us. That's the, I think, the common reaction I can imagine. Then is it easy the process of doing the flip into the like entity in Hong Kong, Singapore, Mauritius from the African entity?
Okay. So from the Nigerian perspective, yes, absolutely. The flip can be achieved in a number of ways, right? The less complex flips are done, using a share exchange agreement situation. So it's just a share swap, and documentation is put together. The new holding company, agrees with the existing shareholders to swap shares, right, in the Nigerian entity, which the holdco will get in exchange for shares to be issued to the existing shareholders in the new holdco. So that's usually done, by that simple swap agreement. What we typically make sure we do, however, is ensure that from the relevant holdco jurisdiction level, we get local counsel to confirm that this works, and then they advise on whether there are any tax implications or any concerns to be mindful around. But this can easily be achieved, with the flip or the exchange document.
Yeah, what I experienced in Asia, I mean, for the company I work for, we did exactly same thing. Because, for example, we have a lot of investment, and then invest the company in Asia, Korea, Japan, and then because of I mean, in order to leverage the Hong Kong's jurisdiction domicile benefit, because we don't have a lot of tax, right? Hong Kong doesn't have I mean, tax for many items. Then is let's just set up the Hong Kong holding company. Then depending on the country, like for example Korea, Japan, subject to the tax I mean regulation. When we do the flip into the entity into Hong Kong, we have a lot of tax issue, in fact. But you don't have that issue in Africa?
No, if you're flipping into Nigeria, honestly,
flip into the Mauritius, for example, from Nigeria.
Yeah, if you're so it's just a couple of things. So no tax issues really. I haven't seen tax issues arise, especially with like a Mauritius or whatnot or Delaware. I haven't typically seen tax issues arise. Yes. The only one thing you have to be mindful of, right, at that stage then becomes what merger control regime, right, is in place. So typically for Nigeria, we came up with our merger control review laws and the anti-competition laws about 2 years ago now. And that's really just changed how transactions are done, because now you have to be more mindful and you have to pay attention to when and where you need to go to the regulator, right? To say, okay, I'm doing this flip, and this is what the result will be, X, Y, and Z.
Yes, it sounds like still it's a smooth, the process is smooth as compared to the country I mentioned in Asia. then an
Mm,
entrepreneur doesn't need to set up the holding company from the beginning, because when they have an investor, have a serious discussion, then they may consider to flip into the entity holding company in a specific country, right?
mm. Fair, fair.
Yeah. Okay.
Absolutely.
Okay. So I covered most of the questions, and so
Fantastic.
you're working as a partner for TNP. You said at the local law firm in Nigeria. So working with the
Mm-hmm.
entrepreneur and startup a lot. So what can he expect from you and TNP this year, and what is the long-term vision for your firm to build together with the entrepreneur?
Okay, fantastic. I think I'll tell you that, our unique character, right, with the global outlook and local footprint is our
Yes.
biggest asset and value proposition. And our ability to provide, let's say, best-in-class services, to our
Yep.
clients in a prompt and efficient manner, also makes us very unique in this jurisdiction, right? So with our team, I have my colleague Genevieve on the call. These are innovative and result-oriented lawyers who are dedicated to getting things done. So we're really just confident of achieving our vision, right? To be the number one
Yes.
law firm in Nigeria by our target date.
Yeah.
So we're
Yeah.
working, we're supporting our clients, and we're helping to build this ecosystem.
Sounds like good plan. But I
Absolutely.
understand in Europe, in the America, in developed world, I heard about a very innovative business model of law firm who work for the
Mm,
startup venture capital. Instead of like, for example, legal fee they receive it in terms of equity or whatever, right? In an
mm,
innovative
mm,
way. So
mm.
yeah, just share with you. So you haven't considered that kind of innovative way to help the entrepreneur?
It's very interesting. Do those models exist? Absolutely, they do.
Yeah,
These are decisions to be taken by, the entrepreneurs and the service providers, right?
right.
To determine, what level of support is being provided. Does it work okay, for both parties, right?
Yes,
To agree on, say, a consideration in kind, in this case, which is the shares, right, in exchange for the support and guidance that will be
yes,
provided. Absolutely, we see those. We
yeah.
definitely see
I
those.
think from tomorrow, not tomorrow, when
Mhm.
after I released this episode, a lot of entrepreneurs
Mhm.
reach out to you to get a legal service.
We will we will be more than happy to accommodate and have the
Right.
conversation.
Creative way,
So
right?
hello
Creative way to work
entrepreneurs,
together. Yeah,
absolutely reach out, reach out, reach out. The
yeah.
goal is to make sure you're supported and you're properly guided.
Okay, very good. Yeah, thank you so
Mm.
much. Thank you so much for sharing the valuable knowledge and the advice and to help the entrepreneur in Africa and Nigeria.
Thank you very much, David, for having me. This has been a very interesting conversation, and
Yeah.
I'm trusting, that your listeners, get the benefit of this. And yeah,
Yeah.
absolutely. Thank you.
Yeah. So we can do this again and again.
I look forward to it. Actually, I do.
we
I
can
do. I do.
upgrade. So
Yes, yes.
we can, so
Touch on
that
burning
way,
topics.
yeah.
Yeah.
So we can invite the entrepreneur as well. Right? They're so scared. So we need to
Mm,
help
mm.
help and support them. Thank you very much for listening to this episode. Don't forget to subscribe to the podcast, share with your friend, and drop me a review. Goodbye.